In the final trade of the day, Alan Nuckman of Agora Financial joins us, and you called it. You were 100% sure.
Saw it coming, surprise.
You did.
All right, so there's a rate cut. We'll talk about the lessons we learned from that later, but there's still more in the pipeline. There's a 50% chance we could have another cut by, and the key word is by, the April meeting.
By the April meeting. Let's take a look at more trader talk. What's going on in your world?
Well, the current positions, we've got March positions, but they have 2.5 weeks of time. So let's look at what's happened in the last week. Time is our ally here, but the lesson to be learned is that Micron, the trade we put on last week, even though the market tumbled greatly, the position yesterday was near break even. That's why we trade the way we do with in the money options. Plenty of time for good things to happen.
Nugget, a big winner for you.
Right.
Gilead.
Yeah, that's how you say it. Gilead. So
Yeah.
that stock, I didn't do any studying on vaccines or viruses.
Oh,
I
my
just
goodness.
saw it in the charts. Trade what you see. So we want to follow that money flow, and that's proven to be successful. That one gained 155%.
Because a lot of traders were watching for companies that were working on a potential.
Not me. I was just looking at the indicator. I was just looking for that money flow, and that's what we saw. So let's talk about the new one.
Let's talk about the new one.
All right.
Hewlett Packard.
Yeah, Hewlett Packard, WPI. Smart money sees something there. Now, this is a stock that dropped 13% in 4 sessions. So from a value standpoint, let's look to see if it holds this super support. It's been trading between 16 and 24 for the last year. $20 is a key level of support. So we're looking at the $18 call for April. April is about 6 weeks of time. Again, it's a smart money play. Somebody sees something here, and a la GILD, we're going to follow what the indicator tells us. That's been successful over and over.
All right, your trading floor takeaways.
Number 1, DK the trade.
Don't know.
So you don't know. We knew the rate cut was coming.
You did.
We knew for sure, but you don't know how the markets are going to react. Even if you have the information, it's not about why things are happening. It's how things are happening that's important. Follow how the markets are moving, not why. That'll give us success.
And then your reaction too.
Exactly. That's important.
Number 2.
50-50, half and half. So the market gave back half of the gains yesterday that it made on Monday. And we're also at about halfway point from the S&P low 8% ago, and we're now 8% off the high. So we're at this important midpoint level. Let's see if we get back above that. Every time in history that it's gotten back above that sell-off midpoint, it's made new all-time highs.
And then number 3, lonely one.
Number 1 is the loneliest number.
1 is the loneliest number.
And we've never seen this before.
No.
So this is very unique. The 10-year yield has gotten down to 1%. It wasn't so long ago. It was February 2018. We were worried about the 10-year yield being above 3%, and that caused the markets to sell off. So it's interesting to see how the markets react here. But what this tells me, with the yield down here below 1%, that eventually, I don't know when, but eventually that makes stocks more attractive.
I like how you're talking.
Optimism.
You're always optimistic.
Exactly.